What's up, guys? Welcome to the video. It's me, Luis from Nice Peeps speaking. Late at night, I'm outside and I just thought of just giving you a small tutorial video on a little bit of market making, but I'm gonna give this example using step index with a 5-minute chart. So guys, this is it, guys. This is what I have on step index right at this moment, 2030. Yes, and I've been listening. Okay, so without long ado, let's get started. So guys, look at the movement of step index. Look at what I have here. It has a summary of everything. Only this portion here has a summary of everything, levels and stuff. If we look here at this point here, this is where everything began. Because what market makers do is they want you to place buy orders here because it really looks like it's going up. They want you to place buying orders there, but you don't place buying orders there. These are the levels that you're supposed to know. Where does it initiate? You're supposed to get the initiate. This is what you're supposed to know. You get the initiative. So this is where it starts. Everything. This is where everything starts. For a moment, I'm just gonna delete my. I'm gonna clear my charts for the sake of this video. I think it's special. I want to make it special so that people get something, get to move away with something. I like naked charts. Now, look, this is where everything started. Here at this point here, this is where everything started. It really looks like it's going up, but it's not going anywhere up because when it rejected, it means it's now going down. When it went down, look at this move here. Our favorite move begins now. Bang. Bounces up a little bit. It bounces down. It gives us a double bottom, forming a W shape. When we have this W shape with good rejection, where is rejection? Here is rejection. As you can see, the candles were not rejecting so much. And if we don't have a good rejection here, for example, this scenario here is not much of a good rejection. What do we have? What are the factors that confirms that it will go up? It's our indicators. They will be looking oversold. Okay, so when we have that now, we are good to go. We are good to place our buy orders here. Now, when we place our buy orders here, it will go up. Then it will do what we call a stop hunt. When it does a stop hunt, let the stop hunt reject. A good rejection this time. Look at a good rejection here. When it gives a good rejection, buy again because it's a stop hunt. This is the lowest point from our W. This is the lowest point, so you get a buy. You know that it's going to do a stop hunt. A stop hunt does not mean that we are going sell. A stop hunt is to trap beginner traders. Here is where beginner traders are going to be trapped because they're going to see candlestick number 1, candlestick number 2. This, they will even call it a bearish insider. Then they enter sell. You do not enter sell there. You dig? You get it? Now, you enter another buy there because of this rejection here. When you enter that buy, it will go up with you. It goes up with you. And it operates another stop hunt here. Then it goes up now, the lowest of it going up. You see, it goes up with you, operates a stop hunt, then now it goes up again, but it is rejected. That's when we are looking at exit. Now we are looking at exiting our trade. And imagine these are the pips that we have. From here, we are holding from here and we are holding... pardon that. We're holding this much. We hold this much. We are going to exit our trade here, almost here. We are looking at this. 33, this is 33.8 pips. That's a good movement for the step index. Now, look, when it ended here, it restarted again the same process. Consolidation is what I have here. I have good consolidation here. After consolidation, I have my consolidation broken out. I have this bounce back. I am not rejected here, but look at what my indicators are telling me. They are not overbought because they have not reached the minimum level, which is here. which is this point. But what do I have? If I twist my chart, I see that, oh yes, they can be oversold. And also, they are not oversold for sure, but at the same time, they are not overbought. So we are going to carry, this is when we hold our trade till it's overbought. So our entry was gonna be here. Then now it's going up. What do I have? What do we call this? We call this a stop hunt. It's hunting the stops and it's rejecting. So since it is rejecting, what am I looking at? I am looking at buying again. Like this. I'm looking at buying again because I know that it's going to reject. It's going to reject because this is a stop hunt. It's repeating the same process. What it did here is exactly what it's doing again. Look, it goes down with me, double bottom, I buy. Double bottom means I'm buying. This is a good confirmation, it's double bottom, and here it's over. It's oversold. Now I'm buying, stop hunt, I buy again. It goes up with me. If I had the courage, I could hold more. I hold again. Then when it comes here, I buy again so that when it goes up with me, but this takes courage. Don't worry about this trade, it will come back. It will definitely come back. So this is what I have for this video. Peace, guys. I'm Luis from Nice Pips. If you want this video on YouTube, you can just suggest. If you think it's not necessary, it's just a small lecture for everyone. I'm out, guys. Peace.